Welcome back to the Talking Hedge. I'm Josh Kincaid, Capital Markets Analyst and host of your Cannabis Business Podcast. Today we're going to review the capital markets, see what's moving and shaking, gainers and losers from November 19th. According to this Benzinga article, taking a look at Aurora, they're up to over 2.5%. Afri is up 12, Chronos up 9, Hexo up 15%, Kushco up 11.5%, Organograms up 12.5%. These are all in response to earnings reports. And so a lot of these companies are within an index too. And so as people are either speculating or assuming that we've kind of hit the bottom, which I don't think we have, but it's close, nonetheless, they're seeing some significant increases as most of these stocks have just been battered down 50 to 60%. Some of the losers from last week: Harvest Health down 3.6%, MedMen dropped 14%, CBDMD down almost 7%. So since March, we've seen a trend where a lot of these cannabis stocks have taken a dip, not only individual stocks, but indexes too. ETFMG, Alternative Harvest Index, MJ, just took another dive this last week. And so definitely kind of seeing that trend. Still wondering where the support level is going to be at when we're going to hit the bottom. I think it's going to be relatively soon, a little shaky through the end of the year as people are reallocating their portfolios. I think that with the steep declines that we've seen, we're really close to the bottom. But let's take a look at this Canopy River highlighting the venture capital trends in the cannabis industry. 3 months isn't a long time in the cannabis industry, especially in the last 3 months. Feels like there's been a dramatic shift, according to this article. So data shows that the amount of capital invested and amount of deals completed in cannabis has been steadily increasing since 2016. Notably, LeafLink's $35 million Series B ranks among the top deals. However, median deal sizes dropped 49% compared to the third quarter of 2018. Median valuations increased 77% over the same period to $42.5 million, but over the long term, these valuations have gradually decreased alongside median deal size. And a lot of these deals are unraveling because the valuations aren't holding up, and so they're restructuring those as we speak. So this is more of a part of normalization, professionalization. We don't have arbitrary $420 million valuations. There's going to be more of a approach from a value investor standpoint moving forward, and a lot less speculation, more scrutiny. So the CEO of Canopy Rivers told Benzinga that he sees changes as an encouraging sign for the cannabis industry as the industry shifts away from high valuations that induce volatility and diminish long-term value. And while the data shows that Canada and the US continue to drive the majority of venture capital deal flows, it also suggests that more activity could flow to Europe, and probably specifically Germany. They have over 70 million people that have access to insurance. And so once people can get free medicine, they're going to sign up. So that's a lot of people. I expect a lot more mergers and acquisitions, a lot more consolidation and capitulation on the bottom side. A lot of these producers should form a co-op if they can. A lot of them, in Washington, they're not able to work together. That would be kind of collusion. But they should try to aggregate and scale up and try to survive this next wave of consolidation and mergers. Beefing up your SKUs to 15, trying to look for capital to expand out of state to try and advertise, look for an exit strategy using first mover advantages. Otherwise, it's going to be a long time for that next opportunity, that next wave. There's just going to be a lot of scrutiny in the meantime. So it's an easy out now, but if you're in it for the long haul, then you just buckle down and wait through that nightmare. So we touched on the ETFMG Alternative Harvest Index. They lost 56% according to this article. I think it was maybe closer to 61 from what I saw. Nonetheless, it was a disappointing earnings report. So this article is taken from the Wall Street Journal, talks about how cannabis investors realize that their investments in Canopy Growth, Tilray, Chronos, and Aurora are going up in smoke as of the latest earnings, and calls out millennial investors, saying that 2019 was a wake-up call for many who went out on the risk curve and piled all their savings into pot stocks. I think they're referring to Robinhood, which had some of the cannabis companies as the number one investment. And a lot of the millennials are using Robinhood. It's a free app to be able to trade, very popular for that demographic. But shares of Canopy Growth slid last week as did Kronos and Tilray, also plunged last week amid disappointing earnings. But as we just said, that kind of came back. So there is some volatility, there is some speculations, there is some profit sharing. People are probably putting in trailing stop loss orders in order to avoid steep losses, as well as taking advantages of those dips. So BTFD, you can buy the fucking dip and play that if you want. That's an option. That's a strategy. But don't listen to me. This is just for entertainment purposes only. Cannabis Growth CEO said that it's been a challenging couple of quarters in the cannabis sector, and that there's still an emerging global cannabis opportunity with hundreds of billions of dollars across medical, pharmaceutical, CBD, and recreational cannabis. Tom Harris made an interesting comment. He's a founding partner and CIO of CB1 Capital and said that the implosion of pot stocks this year could rival past bubbles that he's traded. He tweeted that he's been trading 30 years and he's seen a lot of hate. Tech stocks during the dot-com implosion, home building during the housing crisis, and bank stocks in the great financial crisis. So he doesn't know if cannabis is there yet, but it's close. And the article concludes by saying that as of now, the pot bubble has imploded and perhaps could suggest market liquidity is becoming scarce. I might be in agreement that the cannabis bubble has popped. There's definitely been constraints in capital. There's been investors that have moved to the sidelines. Those that are out there, the angel investors, aren't so giving. And the other investors, institutional accredited investors, are looking at everything with a microscope. So they're not speculative. They're not throwing money around. And so this Yahoo Finance article says the pot stock bubble has burst, and here's why. So this article was taken from Bloomberg and points to the earnings report from Canopy Growth, talks about how their revenues fell short from Wall Street investment. And one of the analysts said that it was astounding and sent their shares lower. Talks about how MedMen also had some disappointing earnings, had to lay off 20% of its workforce. MedMen's chief executive officer said that the industry was defined by growth at all cost. And now they're transitioning out of that chapter, and that transition is harsh and quick. One trend I've seen is a consistent lack of accountability with funding. A lot of companies are able to hire at will and spend at will. One company in particular had an advertising budget of $150,000 for a $60,000 venue. They pulled in $500,000, so that's good. But if you don't have that kind of capital, it's going to make it challenging. And then if you do have that capital, you don't spend it wisely, things can get out of hand quickly. And I think that's what happened to a lot of these companies, the Weed Maps and you name it, Hexo, all these companies who had to lay off anywhere from 20 to 50% of their workforce didn't have someone holding them accountable, throwing deals together at all costs, just like the CEO said of MedMen. Whereas somebody should have been holding them accountable. That's what the board is for. And so I would expect some litigation to result in that kind of almost rampant autonomy, where they could just kind of go out and do whatever they wanted and no accountability. And those days are over. Some of these companies might not make it out of the next wave of a correction. And so if there is some bankruptcies, you'll see that piecemeal. There'll be continued M&As, but there is a potential for an $85 billion market by 2030, and that's going to create vultures. And so there's people who are looking at value. So the chief investment officer of Measure 8 said there's an incredible pocket of value in this space, but the street's not willing to see that right now. But he's talking about Wall Street. With the Safe Banking Act that just passed in the House, that's going up to the Senate, that would pave the way for financial institutions to do business with cannabis companies, bring large institutional investors to the U.S. capital markets, and obviously afford the ability to bank, to have business as usual, to expand scale, and become a household brand. The CEO of Cohen said in almost every other industry, people can make relative value judgments, but he makes a point to say that people are getting involved in cannabis as a cause. And so that makes it difficult. I've made an analogy to Tesla that has terrible financials, but people like the electric vehicle model, so they just invest in it. And so people aren't looking at technicals, they aren't looking at fundamentals, they're just looking at what their return on investment is going to be. And so MedMen's CEO said that the capital markets have gone from frothy to completely closed. So we're entering a stage where businesses are going to have to be self-sustaining. And that is not going to happen. They don't have the huge amount of capital to keep their business operating, and they're going to have to look for either investors or other businesses to help them survive, because we haven't even seen the overall economic crash. This is just an equity play. This is just investors pulling their money off the table from the stock market. Wait until the overall economy takes a shit. We've talked about vices. We've talked about sin stocks. We've talked about how to take advantage of that opportunity when it happens, because consistently we've seen an inverse relationship to vice stocks, whether it's defensive stocks or tobacco, alcohol, cannabis. We will see massive speculation, and the timing is perfect. Well, almost perfect. You'll see from our artificial intelligence based algorithm, it's technical analysis. So we don't care about the fundamentals, but we look to see with predictive analytics what's going to happen. And we're really accurate. This is 4 or 5 weeks that we've been doing this, so not a long time for cannabis. Now, this algorithm was written years ago and has been doing very, very well, 35 to 65% annual returns. And so we're seeing 13% in a day in cannabis. So very, very accurate. You can take a look. I'll put the link in the comment or in the show notes. What you'll see is that there was a massive amount of stocks that took a dip, and yet we performed really well. So that's just a validation for us. So the idea is to set up 2 different funds for this AI-based technical analysis, one on the upside and one on the downside. There are a lot of cannabis short sellers. According to this Benzinga article, $190 million in November alone, wanting to bet against the market. So you can have an inverse index as well as a normal one that's going to be going up. So short sellers have aggressively piled into the cannabis space in 2019, with short interest up 39% this year to 4.1 billion. Short sellers are paying a steep price to bet against cannabis, with the average cost to borrow at 21.6% of cannabis stocks. Tilray's the most expensive cannabis stock with a 58.8% US borrowing fee. Canopy growth shares are now down 24% year to date, making them the most profitable cannabis short of 2019. Canopy shorts are up 309 million year to date. So there could be a short squeeze. That's when short sellers have to close their positions, which will immediately make that stock go up. And so a lot of times the third Friday of the month is when options are due. And so when an investor has to close their positions rather than executing that option, that'll create a short squeeze and push that price up. So given the year-to-date gains, there's analysts that said the cannabis short sellers have no reason to cover their short positions at this point. In the past month, short sellers have added more than 20 million to their positions for Canopy and Afria. So that analyst said, quote, if the sector-wide price weakness continues, then they'll see continued slow and steady increase in short selling in the cannabis sector. Benzinga's take is that the cannabis stocks will likely continue to be volatile in the near term. What we've seen with our AI-based algorithm is that there has been a little bit of a play, kind of moving sideways week to week, and then a massive drop last week after earnings. And that drop is in line, in trend with support levels much lower than they were. But I think by the end of the year, we're going to see that support level reach the bottom and start to kind of go back up. I think with dollar cost averaging, you throw a little bit in every week, every month, whatever, it could go down a little, but we're really close to that bottom until you have systemic risk, which is when everything capitulates and collapses, which could happen, probably will happen. But again, if you just set up a trailing stop loss at 5%, then that's the most you'll lose, and then it'll trigger that sell, and then you're out. So you can play it all the way until it drops, and then BTFD by the fucking dip at that new support level, whatever it is. I think for the next year, you can play that until Main Street has an economic correction. Everybody pulls back spending, and you kind of see that natural recession play out. Cannabis and vice stocks will increase, but they'll take a hit with everything else initially. But you just have to come back to the Talking Hedge. So with that, we'll roll this one up. I'm Josh Kincaid. This is the Talking Hedge. By the way, if you enjoy the content, please show your support with the cushy gesture of $4.20 a month on the Talking Hedge's Patreon page. This will kind of help you spread the word. I've been asked to speak all over the world, from Toronto and Colombia, Spain, Miami, all over, Tokyo, but your support's important to me. I haven't monetized the podcast. I want to be as authentic and transparent as possible. I want to avoid conflicts of interest or even the perception of paid opinions. So don't forget to like, share, and subscribe, or pay me on the Talking Hedges Patreon page, or don't, and I'm out.